Hmm. Hey all, good morning. Welcome to ShareTreck. This is Raj here. Friends, Wall Street looks a bit steadier today after volatile start for September. Global shares are trading higher in early trading, led by momentum in Alphabet after the court had a favorable antitrust ruling and lifted both the S&P 500 and Nasdaq to strong gains on Wednesday. Google's win alleviated regulatory fears, helping major tech stocks rebound by up to 1%, while Apple shares also advanced on continued default search deals. It seems that there is a little bit of positive going on. However, the Dow is lagging slightly as blue chip stocks face pressure from soft economic signals and corporate headlines. Actually, Dow has broken a long-term trend line and fallen below that. So that's a little bit serious in my opinion. We'll see how it goes. There is Salesforce also, which was sharply down pre-market after their weak revenue forecast signaled slower than expected returns from AI investments, reminding investors that not every tech play is a sure bet this cycle. And I think if you look at the treasury yields, the yields have dipped after peaking near the critical 5% threshold earlier in the week, with the 30-year falling below 4.9% and the 10-year hovering at around 4.2%. This relief is welcome after raising yields triggered a risk-off tone among investors. Labor market worries are still swirling, and Wednesday Jolt report showed a drop in job openings to post-pandemic lows, increasing the odds of a Fed rate cut in September, now priced at nearly 94%. And imminent data includes today's initial and continuing jobless claims as markets brace for Friday's non-farm payrolls, a key signal for Fed policy and market sentiments. Eyes are also on U.S. import-export figures, with trade policy uncertainty hanging over price reaction. And I think that the Fed has got a dual mandate, so it has got to look not only at employment stats, but it also has to look at the inflation stats. We cannot rule out tariff-based inflations. It has already shown up in PPI. It's just a matter of time before it shows up in CPI. So the Fed's task, I think, is very, very difficult. And there is fresh legal drama around President Trump's tariffs, which await a Supreme Court response, meaning trade policy and Fed independence will remain front of mind for investors this month. And if the courts rule that Fed's tariffs were illegal, you already have a video that I have made earlier talking about what it means to the stock market and to the economy. And if they uphold, we already know that it will mean that there is certainty and inflation will come up and we'll go towards stagflation. We don't know which path of the road we are going to take. It's a decision whether we go left or right. So we'll see it when it happens. Difficult to predict. Salesforce earnings disappointment added to concern that AI wave won't rescue every company's bottom line in 2025. So this is the backdrop in which we are looking at the price charts today. And I must confess, my friends, that personally, I'm losing patience with the market because almost 3 months ago, I had gone bearish and I have short positions on S&P 500 and the MAX and Tesla. And all of them are doing really badly on my portfolio. Of course, I have made a lot of profits. I have realized profits and they're sitting in cash in my portfolio. But I'm feeling that if I throw in the towel right now, that's exactly when the market will fall. So I'm caught in an unenviable position where I'm paralyzed. I cannot move. I'll confess this honestly. We are a retail investors channel, and my objective is to actually mirror what's happening in my mind as a retail investor so that I can get comparison from other retail investors, which is very difficult to get. All we see on YouTube and media is experts talking about stuff, looking at historical data, looking at their past experience and giving us advice. that doesn't help me as a retail investor. So that's the objective of the community. So I'm laying it bare out here. I'm not ashamed of the fact that this is where my portfolio is right now. Let me summarize it again. I have lots of profits and I have more cash in my books than the profits, which means that I have realized profits and I'm sitting with a lot of cash. Unfortunately, my shorts position, which I started 3 months ago, are starting to creep up in losses to eat up most of my profits. And I'm unable to do anything right now. So this is my situation. Welcome, Hot Dog. Thanks for joining in. Yeah. So we have to be honest because in the media, we are getting all kinds of hype and everything. This is a retail investors channel. If you're looking for an expert opinion, you got to go somewhere else. And that's exactly why I start the live stream at 7:45 so that you still have time to join many of those trading experts who have got the channels. I also look at them to get an idea of what's happening. But this is the objective of the channel. This is where we are. And with this, I'm going to look at our TradingView platform and try to see if I can have any opinions. I think at the most I could do is resistance and support levels and some chart patterns. What will happen next? It's anybody's guess. So let's go to the TradingView platform. Let me reset everything so that we are in the TradingView platform. And here we are. And now we are looking at S&P 500 futures. Let us go to a single window. Let us move out of the 3-minute. Yesterday, we did an analysis on 3-minute, assuming it to be a 1 day. My mistake. I'm sorry about that. Let us go to S&P 500 futures, 1 day chart. And you can see there's a potential head and shoulder, but it did not trigger. It went off above. So what I'm seeing here, in my opinion, is a bear flag. And this bear flag has a potential to come down, more probably to come down than to go up. We have a resistance here, which is going to be at 6,474.75. We are just fractionally below it at 6,467.25. You would see that the market sentiment is bearish. MACD is bearish, tending towards the signal line. Momentum is flat, but above average. It's kind of a Goldilocks. And we'll see when the market opens whether the retail investors who are buying the dip still have the courage to continue buying the dip, and if they push these markets higher. We also have the next resistance, which is the channel that we have been in, the parallel channel. I'm just going to recalibrate the chart so that you can see the parallel channel. This is the parallel channel in which we have been, and this is the upper end of the parallel channel, and you will see that the next resistance is going to be somewhere around 6,489.50, which is this blue line that you are seeing here. I think that's the range. So if you ask me what's going to happen with S&P 500 today, I don't know. It'll all depend on what happens with the jobs data and the economic data. But there again, I'm a little bit confused. I think that if the markets have already priced in a rate cut, then Fed actually cutting the rate is not going to add anything more to the markets. The jump is already in here. But if the Fed was going to say that, no, we are concerned about inflation moving from PPI into CPI, therefore we are going to hold the rates, in that case, I think the market could drop. If any of you have any other insights, please put that in the comment section so that I can use it in my thinking process and it may help me in my trade today. Next, let's go into NASDAQ. Similar situation. This is a proper head and shoulder, and our trigger point would be somewhere here. I think, let me draw it just to visualize what the trigger point could be. This could be the neckline. We dipped briefly and came out, and this is a bear flag that we are seeing. And bear flags typically tend to drop downwards. So if that happens, we still have the possibility that we could drop down below the line of support. This diagonal line that I have drawn here, the neckline, is actually a line of support right now. And there's a lot of supports available for the stock market out here for the NASDAQ. And the first support is at 23,449. Second is at 23,316. And these are the numbers that I think will provide some kind of a support for today. Overall market sentiment is bearish. MACD is bearish, but tending towards the signal line. Momentum is above average. Yesterday we had seen it was below average and dropping fast. So there is a lot of adjustments happening out here. So I guess the market is waiting for economic data. Dollar index is up a little bit at 0.17, and the yields have all started dropping. It will be very interesting to see where gold is. And if you look at gold, gold is down 0.40%. So I would say that this could be the formation of a bullish pennant or a bull flag with an objective of moving upward, because as I said, the economy is in a mess, and even the political situation in the US is in a mess, with military being pulled out into various cities, and Epstein victims actually coming out and holding a press conference and saying they are going to release the list themselves. So this shows a significant drop in the prestige of the institutions. Like the courts do not have the prestige they once had. The courts are now considered partisan. The government is not having the same kind of credibility that it used to have. And the congressmen are not having and women are not having the same credibility that they used to have. Also, the tariffs are going to the courts, and in a good country, when anything goes to the Supreme Court, people would have the full faith that the law will be interpreted in its true form, and the verdict will be rendered. But now people are talking about conservative justices and liberal justices, and the court being stacked towards conservatives. So if you look at all of these things, it doesn't bode well for the reserve currency. It doesn't bode well for the capital markets, which are the envy of the world. So I think gold has got to keep on moving up in this situation. Also, remember, most of the central banks are moving out of treasuries and getting into gold. So that's also pushing up the price of gold. So there could be a little bit of a pause in central bank purchases. But remember, once central banks have bought those gold, they'll be out of circulation for a period of time until the central bank decides to sell them. That's when the price will drop. So gold, when it goes up, it's going to stay up there for a long period of time. So that's my opinion. I would like to hear your opinion in the comment section, please. Now let's look at QQQ. QQQ is up 0.16%, and that shows that pre-market there's a slight positive bias. Now I'm going to look at S&P 500, the indicator itself, which happens to have a reverse head and happens to have a head and shoulders pattern, which could give us a little bit of a dip. For today, the support is very strong at 6,430.07. And I think we ended above that yesterday. And in the pre-market, we have seen that we are slightly above in the pre-market. So I think we are going to open above this support, and this support is going to be what is going to hold us for today. And I think the resistance is going to be somewhere around 6,506 for S&P 500. NASDAQ has a very clearly defined head and shoulder pattern. However, yesterday's price action has thrown a spanner into the works, and we have a resistance which is going to be at 23,598, and we have a support which is going to be at 23,279. So between these lies the fortunes of NASDAQ. Market sentiment is bearish, MACD is bearish, and momentum is just above average. VIX, unlike yesterday, is dropping. It's down 0.43% at this point of time. And let's go on and have a look at AI. I'm going to look at NVDA, which is up 0.31% in pre-market trades. And we can see that the resistance is at 173.89 and support is at 166.32. We have a head and shoulder pattern out here, which is a bearish pattern. And if I was to draw a neckline, and come on, where are you? Okay. If I was to draw a neckline out here and then project where the pricing will go, I would say that the neckline gives me this length. And if we broke down from here, I think we have potential to go all the way up to 163.07 for NVIDIA. And I would look at the current formation as a bear flag, which is getting created, and the bear flag has to break out on the downside, and it's going to get resistance at around $174 today, and it will have a support at around 166.01. That's the range. I can see that the market sentiment is overwhelmingly bearish. MACD is super bearish, and momentum is also below average. So that's what I think is likely to happen out here. And if you look at Meta, Meta is also showing a bearish market sentiment, a bearish MACD, and the momentum that is below average. And it was looking at a resistance at around 737.45. But this morning in pre-market action, it's gone way above, and the support remains there at 737.45 because we are at 750 in the pre-market trading session. I think for today, I would look at a resistance somewhere around 775.45. That's where I think the first resistance would be. And let's go to Google. Google is up significantly thanks to the court verdict. There could be a little bit of a profit taking. And also, we need to fill up this gap. But remember, Google is one of the best valued companies in terms of ratios. So I think that Google may have a lot of strength, even though the RSI is overbought. The worst it could do is to consolidate. So I'm expecting more consolidation today for Google. And then we look at Amazon, which is up 1.92%. There is a gap fill that is waiting to happen. The pre-market action shows that the gap fill would take place today. Right now, we are at 230.33, well above the gap that was created. And therefore, I think Amazon is also starting to look really good. Yeah, yes, hot dog, I agree. Yeah, Google is the best mag 7 for future. It has got all the assets in place, and the valuation is also pretty decent even now. So with that said, I think that for Amazon, there is still a bearish market sentiment, bearish MACD, and momentum just at average. So this could be an opportunity to probably enter into Amazon and look for an upward movement. Also, if the tariff issues get resolved by the court, that the tariffs were illegal, there are a bunch of companies that are likely to gain. Amazon could be one because Amazon has got a lot of Amazon Prime, which they themselves are selling. Amazon merchants are going to benefit from that. And also you'll have Walmart benefiting from that, maybe Costco. There are these companies which import a lot from overseas and then sell into the local market. Home Depot could be one of those beneficiaries. So there's a whole lot of companies that could suddenly be able to buy back shares. They'll be cash rich, and they'll have a heavy bottom line, which could probably boost their special dividend if they may. And also the fact that they improved their productivity by cutting their costs in order to meet the challenges of the tariffs. Now they are going to be a lean, mean, efficient machine. So it's very confusing, my friends. I really don't know how I can summarize my feelings, because if the tariff decision comes the way it would, then that's going to look really, really crazy. So with that said, I think that I would like to start going a little bit long today, a small portion here and there. Of course, not on the leverage side, but I'll pick up a few stocks, maybe indices or something, and go into it a little bit positive so that I can arrest the losses that I'm getting on my shorts until the shorts start to work. So with that said, let's look at Apple. Apple is down 0.35%. And we have a gap fill that needs to be happen. That needs to happen. So I'm thinking that there'll be a pull towards the gap fill. But at the same time, there is a news article that says that even though Apple has a carve out in the tariffs for imports from India and China, where they're not being tariffed, still Apple is in the process of increasing price for the iPhone. So if Apple increased the price for the iPhone, they got two profits. One is that they have avoided the tariff and they're getting it in cheap. The other is that there's a general environment that the tariff-based inflation is coming up. So in that environment, they're going to increase the price of the iPhone. So they are going to make money hands over fist. So I think that Apple is more likely to go up than to go down. But the risk factor still remains because Trump is a wild card. Tomorrow he may turn around and he may say that Apple has got to pay tariffs. You can rule out nothing with Trump. If that happens, then the stock can fall very sharply. Microsoft is a very strong stock, and I shorted it somewhere after the gap up, somewhere around 431.84 using MSFT, and I'm crying. I'm crying out of pain. I can see the share price drop. It was very encouraging. We have bear flag playing out right now. Resistance is going to be 514 and support is going to be 498. I don't know if it's going to fall down below this, but there is this bear channel support. If it continues coming down, I would be in a better shape. But when I look at the MACD, it's starting to tend towards the signal line to cross over to the bullish side. Momentum is below average. That encourages me. Overall, bearish market sentiment also encourages me. So I'm thinking that Microsoft is moving in the right direction and it's going to go down further. Now let's look at Tesla. Tesla is up 1.11%, and we have a support at around 329.54. And this diagonal line of resistance now becomes a diagonal line of support. So together, they're going to provide support to Tesla. And I'm looking forward to Tesla coming down. I have shorted Tesla quite a while ago, and those charts are in the red. It is TSLQ. And the problem with all these leverage products is that they can decay very fast, and they may then get a reverse split, and the losses would be so much compounded. So I'm really worried what's happening, because if I look at Tesla and if I look at BYD and others, I think the others are stealing a march over Tesla. I think the fascination for robotics and AI from Tesla, the Tesla fan club is still keeping all of these things going high. And I don't know when the trend is going to change, but when it does change, it's going to be pretty sharp. But another thing I don't like is the potential formation of a cup and handle. That could also happen. A long-term cup and handle will be very strong. And if it gets triggered, then Tesla's stock can go ballistic. So I'm getting really scared every day that the market keeps going up. And if you have a look at Oracle, it's up 0.52%. And there's a support out here, which is at around, I would say for today, it's around 219.75. That's the support for today. And resistance for today is 227.41. Pre-market, we are already up for Oracle. AMD is down 1.38%. It's moving towards our potential target of the double top, which is 143.08. We still have support today, and the support is going to be 156.64, and resistance is going to be 163.25. With that said, SMCI is up 0.57%. My short of SMCI is working very well. It's profitable. I'm holding on to it. We are going to have support today at 38.85, and the resistance today is going to be at 42.96. I would also have to pull this diagonal line of support, and it's going to be the next support, probably to trigger tomorrow, somewhere around 38.19. Broadcom is up 0.50%. It's below this resistance of 302.73. And sorry, let me just open this up. It is 303.04, which is the resistance that we have out there. And in pre-market session, we are already at 303.90. Therefore, this becomes a support for today. And our resistance for today is going to be 316.90. But Broadcom has got a bearish market sentiment, bearish MACD, and momentum that is just above average. And since the MACD is moving towards the signal line to cross over to the bullish side, I think that we can't write off Broadcom. Broadcom might continue to move a little up. And we look at Palantir, which is down 0.25%. And we have the diagonal line of resistance out here, which is going to provide resistance today at 164.47 and support today somewhere around 144.72. And SMH, which is a semiconductor ETF, is up 0.27%. But if AMD moves down and NVDA moves down, this is also likely to come down. There's a gap fill that needs to be happened. That's probably what's being tried out. There's also a head and shoulder pattern, which is working out there. And I'm going to draw a line, which should be the neckline for the head and shoulder pattern. So this is our neckline. It's a conservative neckline. And if we fall below this, then we'll trigger drop. And that drop, I'm going to put a target out there. So wherever we break down from, I think our target is going to be 261.97 for SMH. Tempus AI is up 0.28%. This is a bullish Bennett, which is working out. Probability of breaking out on the upside is much higher. then breaking out on the low side. But at the same time, you can see a head and shoulder out here. So it's a confusing pattern. We have got a bullish market sentiment, and MACD is bullish, but on top of the signal line, ready to cross over. And momentum, though above average, is dropping. So it's all looking very confusing. I wouldn't hazard to say what I think is going to happen. And Hot Dog is saying Nano Banana by Google is going to kill Photoshop. Has done for me. I should check out this Nano Banana. And yeah, I've seen those pictures of Albert Einstein and Mahatma Gandhi sitting next to somebody. I just gave it a passing glance. So I've got to try it out by myself and see what's happening out there. Maybe it'll help me with content creation. Yeah, it's I'll check it out, Hot Dog. Thanks for the heads up on that. Now, I would like to see Rigetti. The only reason I'm seeing this is because I wanted to go down as low as possible before I can start to buy back again to claw back my losses. And the support line out here is at 13.83, and we have a head and shoulder pattern which could trigger if we fall below that number. I'm watching it carefully. Today the resistance is going to be 15.92 and support is going to be 13.85. Then we go back to genomics. Prime is up 1.50%, still within the bull flag. So anything could happen out here. Intelia is up 0.51% in pre-market trades. Resistance will be 12.28. Support is going to be 11.32. Caribou Biosciences has got no trades in pre-market session. And Beam Therapeutics is up 0.27%. Yesterday, it had gone up significantly. And I don't know why that happened. I don't see any news article out here. If any of you know why that has happened, please let me know. We'll have resistance today at 19.09. Right now we are at 18.81 and support is going to be 17.42. Autoimmune flat and pre-market trades. And we've got a double bottom out here, and the double bottom should give us a target which should take us to somewhere around 4.25. We'll see what happens when it happens. Veritas is flat in pre-market trades and it's on a bear channel. And I was thinking that this is a bull flag, but as we keep on moving down, the bull flag thesis goes away. There is this gap fill that is to happen. Now, if this gap fill happens, we don't have a bull flag anymore. We'll be on a bearish channel. Probably I could draw a parallel channel out here and connect the bottom and pull it out upwards. And where is the other end? Yeah, and pull this out. So this is the channel in which it seems to be moving. So I think we have on the upper bounds for today a resistance at around 2.65. And then we have a resistance of around 2.62, and the support will be way at the bottom. Illumina has got no trades in pre-market session, and we have a head and shoulder pattern which can be triggered if we fall below a support of 93.27. CRISPR is up 0.76% in pre-market trades. We had a resistance at 53.21 that has been overcome in the pre-market trade where the pricing is at 53.38. So I'm not going to change the colors or anything out here. But what I'm saying is that if we fall below that and if we trigger off head and shoulder pattern, and then we would probably look at a target of around 40.87. Right now, the effort is to break that head and shoulder pattern. I don't know if we are going to succeed or not. We'll watch when the market opens. Allogene is down 0.89% in pre-market trades. Resistance will continue to be at 1.36. I think the immediate resistance is going to be at 1.21. And the immediate support, I think, will be somewhere in the region of 0.99 cents for Allogene. Grail is down 0.06%. It has got a support out here at 31.95, and that's going to be the support for today. Then PACB is up 0.79%. It still has a support at 1.21. RG is up 0.16%. And we have a bullish pennant forming out here. I don't know which way it's going to break out. Bullish pennants typically break out on the upside, but market sentiment is bearish. MACD is also getting almost neutral. Momentum is also neutral, so it's very difficult to make a call for ARCG. Vertex is down 0.36, still within the bull channel. Sorry, yeah, I keep on mistaking out here. It has already fallen down. So Vertex was going to form a bear flag, and the bear flag got cancelled when we had a huge jump on the 2nd of September. And today we are forming a bull flag. Bull flag pattern is getting formed. And I think our resistance for today is going to be somewhere in the region of $401.21. And I would say that our support is going to be in the region of 386.83. MACD is bearish, but the sentiment is improving. MACD is bullish. The market sentiment is improving, and momentum still needs to pick up. I think that could happen if the overall market sentiment continues improving. It's a process of over the next 2 or 3 days. So right now, it's not clear what's going to happen. Let's look at DNA, which is down 0.53%. As you guys know, I put money into DNA, and the support here did hold for a while, but now it has become a resistance. So I'm screwed when it comes to this. And I think I'll have to sell the DNA stocks that I have and book the losses before it goes down much further. So with that said, I think I'd like to look at Precision. Precision has got a topping tail happening out here, and topping tail is pretty dangerous because it shows the turn of the trend. So I would probably sell out Precision today if the market goes a little red. I have around 250 shares, and they're also in profit. I made around $1,000+ on this. So a big thanks to David Best for bringing this to my notice. I made money. I've already bought RARE, which is Ultragenics. I bought 100 of them, and it's at a loss right now because I bought at a higher price. And today, pre-market, the way the stock is priced at 32.16, I'm going to be breaking even with Ultragenics, and I'm happy to hold it for a longer period of time. And Hot Dog is saying, I think what's happening in European economies is going to affect the US dollar. I'm waiting on tariff decisions too. Yes, exactly. So I think for RARE, you would see that the market sentiment is bullish. MACD is also super bullish. Momentum is above average. So I'm happy with my decision. I'm going to hold RARE. And I think that if I book my profits on Precision, and then RARE also gives me that kind of profits, I'd be recovering a good portion of my shorts related losses. So I'm happy for that. See, this is how the retail investor community has helped me as a content creator. So apart from David Best, any of you guys, if you have any pointers, just share it out here. I will evaluate it and show how I think about it. But always use your own judgment, your own analysis. All of us are equals. The only difference is that I have a channel and I'm picking up these shares, but you also are capable of doing the same kind of analysis. All I'm asking is share it in the comment section with me and the entire community so that we as a retail community can move together and improve our trading and profit chances. With that, my friends, I'd like to bring this video to an end. A big thanks to Hot Dog and Inf for joining me. Oh, Hot Dog, thanks for the ABCL. You are still researching ABCL. Let me take a quick look before we wind up for the day. Let us go to ABCL, which we have already put into the watch list. So I was thinking that ABCL had a head and shoulder pattern, and let me draw a parallel channel out here. The parallel channel is fitting perfectly for ABCL. So we have hit the top. It was a resistance here. It was a support. And out here, resistance, and potential resistance all over the place. So Hot Dog, in my personal opinion, right? Of course, this is supplement to your research. In my personal opinion, I think that ABCL is moving in this bearish parallel channel. And if I was to draw out the target for this head and shoulder pattern in a very conservative manner, and say that this is one shoulder and we want to come up to here. Just going to do a little bit of fine tuning, taking a little extra time. Sorry about that. And then I move this to here. So if this head and shoulder pattern was triggered, we have potential to go all the way to $2.49. Hot Dog is saying, looking for a cheapest entry, but future looks interesting. Maybe you should make a video about it. Sure, Hot Dog, I'll have a look at it today and make a video probably weekend or by next week. I'll need to read up a little bit. My video may not be as deep as possible, but it would be more of fundamental analysis and looking at some of their therapies. And if I get a foothold on any of their therapies, which I can understand properly, I can come back with some intelligent propositions for this particular stock. But one of the things we should remember is that ABCL also is a stock like Editas or Ginkgo Bioworks or anything. There is always a risk of cash runway going out, equity dilution happening, and the exchange saying that, you know what, you guys have got to be above $1. And they may do a reverse split. So all those possibilities are there. But again, why are we in the stock market? We are here to find out opportunities to make money. When can you make maximum money? When there is maximum risk. But if we are doing risk management and we have got a small amount of our capital allocated for a risky proposition like ABCL, why not do that if there is a superlative returns? I have found those returns in Precision out here, and I'm likely to find it in ABCL. So why not do that also? I might find that with RAR as well. So why not do that also with ABCL? So I'll make that video. Thanks for the request, Hot Dog. One more item to make video for. So that's done. And what else? Let's just have a quick look at Novo Nordisk before we close out. Novo Nordisk has been stealing a match over Eli Lilly. Now, can I see a pattern out here? I do not see any patterns as such. There's a gap fill waiting to be happened. Market sentiment is bullish. MACD is also bullish. Momentum is above average. So it's likely to move up. So to do the gap fill, that's all I can say here. And Eli Lilly, I have these shares. They're moving towards the median of the regression channel, and the median or the center point of this is likely to be a resistance for us today. And if we break through above that, then our resistance is going to be somewhere in the region of 810.79. Market sentiment is bullish, MACD is bullish, momentum is above average but flat. So hopefully we keep moving upwards. And I'm thinking that I'll keep Eli Lilly for a longer period of time. At this point of time, I don't have any intention of selling it. So that's a long position that I have. So that's it, my friends. And thanks, Hot Dog, for joining. Thanks, for joining. I'll catch up with you guys again in the next video. Bye for now.